Hello, everyone, and welcome to Real People, Real Business. My name is Izu, and I'm your host. On today's episode, we have an amazing gentleman who's joining us today. He's the CEO and founder of Hateem Mortgage. He's worked with HSBC, Standard Chartered Bank, and Dubai Islamic Bank. His expertise is in mortgage advisory, and he's worked across the UAE. Fahd, welcome to Real People, Real Business.
Thank you, Izu, for having me. It's always a pleasure to meet here.
Fantastic. Fahd, listen, you've spent years, helping clients secure mortgages at HSBC before launching your own brokerage. Why did you leave such a secure corporate job to kind of venture out into doing your own thing?
So Izu, I've spent good 15 years working in banks like HSBC, Standard Chartered, Dubai Islamic Bank. These banks have given me a very strong foundation in the mortgage business. I've learned in and out of mortgage business. But what I realized over a period of time, that when you are in one set of organization, you are basically advising a client for that specific bank's product, pricing, procedure. That may be the best for that client or no, but you have to sell that product. So what I realized that my clients needs an independent advice on mortgages. So that's when the idea of Hateem Mortgages came in, where we can give an independent advice to the client on mortgages. So we don't sell one product, one policies, one procedures. We basically understand client's requirement and we can give them an independent advice.
Yes.
So that's where the idea of Hateem Mortgages came in. And I started this 1.5 years ago.
Okay.
And now here I am.
Fantastic. I mean, I love the point of view that you want to give your clients as much as possible and taking on your expertise of understanding the market. But I want to stay on this question because I want to understand. I know why you're doing it for the client, but why did you do it for yourself? You didn't have to leave your good job at HSBC and start. Starting a new venture has risks. But what prompted you, as a person to say, okay, I'm outside of my clients, I'm going to go out and do this for myself?
See, at the end, when you are working for an organization, you're limited to a certain package. If you need to grow in terms of financially, in terms of learning, I think business is something which can take you far more ahead than working for an organization. So, and you're not bound by certain policies, procedure. It gives you a freedom to, on the timing side, on the people you want to work with, on the strategy you want to make. So you build your own brand. That's what I wanted to do it instead of working for someone else's dream. I work for my own dream.
Fantastic. I love that. So I heard a lot of words, but the big word that came out to me was freedom. Freedom to work your own time, freedom to sell the packages you want with your client and not to be beholden to what the boss wants. That's fantastic. So let's talk a little bit more about property. So, a lot of people want to own a property, but most people don't understand how investors use real estate to build wealth, right? Most people's thinking is I'll just get a property, get a mortgage, pay that mortgage off. And, and I've recently found out the other day that the word mortgage actually means debt. So the debt that you have until the day you die. But I want to understand how can people use property to build wealth? And how has it remained one of the most powerful wealth building assets? Every expert you speak to says property is one way to build wealth over the long term.
Yeah, this has been there. Property, building wealth through property has been there for generations. And this is one of the best tools to build wealth. So there are basically two levers of wealth in the property. One is the property capital appreciation and one is the rental returns. So both together can make you wealthy. The other way is to look at is that you can use people's money. By people's money, I mean bank mortgage to buy a high value assets. So for example, if you want to buy a property of $1 million dirham, if you only have 200,000, 800,000, which is almost 80% of the property value, comes through a bank loan. And if that high value assets appreciate by 5%, you get a return of 5% on the total assets. So you get a return not only from the rental side, but also by using people's money, you are making wealth from that side.
Yeah.
Other side is the inflation part. So if you can keep the money if you keep the money in the bank, it's there in the bank, you're not making any money out of it, maybe a small sort of interest. But here, when you invest in a property, the property prices goes up.
Yeah.
You are hedging towards this, protecting yourself against the inflation.
Yeah.
So that's where you can make the property to create wealth for you.
Yeah, it works for you. So yeah, you have the property, it appreciates over time. If you're renting out, you're getting the passive
Yes.
income. And the point, like, listen, it took me years to get my head around using other people's money to buy, because I was always on the kind of my mantra was, you have the money. So if I had $1 million dirhams, like you mentioned, I would have gone and bought out the property at $1 million dirhams. But one clever way of doing it is, you put your 200K, you take 800,000, which is the bank's money.
Yeah.
And you still have 800,000 of your money, which you can invest in something else, maybe another property
or another property. So that's a smart way, as you rightly pointed out. So if you have $1 million dirham, you take 200,000 out of it, buy one property, then you're left with 800,000. That 800,000, you can still use it, take another mortgage, another property, and with that money, you buy a second property. So with that money, with bank's money, you are basically making two assets. So two assets, if it appreciate, you will get a return, plus you get a rental return from both the properties where you can pay the monthly installment. So actually, the investment is making money for you through rentals.
Fantastic. Okay, so here's the big question. 2026, we've had some conflicts, we've had economic challenges. Should people buy property in 2026, with kind of the interest rates as what they are now, compared to 2018, 2019, where it was much lower? If I recall, we have a bit of uncertainty in the market economically, and it's global. So should people be buying property now?
So my answer to this is very simple for people sitting outside the fence. So instead of timing the market, they should time in the market. Time in the market is important, because if you're thinking for a short term, just to buy a property now and then sell it in 5-6 months or 1 year or 2 years, that's not the right way to do it.
Okay.
If your income is stable, your time horizon is longer, which is like 5-10 years or longer, then this is the right time to buy. And this is a time where it has become a buyer's market. Few months ago, it was a seller's market. Sellers were dictating the terms, and you somehow was forced to buy the property what others wanted to force it to for you to buy it. Now it's a buyer's market where you can negotiate on the property you want, negotiate on the terms and condition you want. So I would suggest, if your income is stable, your time horizon is longer, this is the right time to get into the property, despite what is happening. And especially in UAE, the way the economy is growing, the way we have the infrastructure here, the security, safety, we have it here. I think nowhere in the world will have this. Plus we have zero taxation here in the UAE. So keeping all those in mind, it definitely makes sense to get into a property if you can afford that.
Okay, fantastic. So play the long game,
play a long game.
Yeah, if you're playing a short-term game.
Yes, property is not for you.
Right. Okay, fantastic. So, you've advised, thousands of buyers over the years in mortgage. What are some of the biggest mortgage myths that people still believe in today? So for example, you need a huge deposit before you can buy. Paying off your mortgage early is not the smartest decision, or is the smartest decision. And that property prices will only go up.
It will never go down.
Yeah. So which of these myths tell us the most dangerous ones that we shouldn't believe in, and how we can avoid any costly mistakes?
See, on a mortgage, there are a lot of myths in that. Yeah. So one is that you need a very high deposit to buy a property. It's only 15 to 20%. If you're a UAE national, you just need 15% of your own money. 85% comes from the bank. You can buy a property. So you don't need a big deposit. And if you're an expat, you just need 20% deposit to get into the property. So you don't need much bigger, down payment from your side. The other thing is that, people don't like debt, but those who are smart, they understand the debt is actually good. They can help you to make more money. So for example, if your mortgage is being at a rate of between 3.5 to 4.5 or 5%. Instead of you go and pay the loan and close the loan, if you have an opportunity where you can make 7, 10, 15% on the other side, why to use your money and close the loan, which you have to pay low profit or interest to the bank? So you can use that money, bank's actual money or your own money, to invest somewhere else instead of closing that loan. So always settling the loan is not the right approach to do that.
Okay.
Other myths on the mortgage side is it's very complicated. It is time consuming. Honestly, it is very simple, easy. If you work with the right people, right consultant, they can make your life easy. In fact, you will enjoy the journey of buying property instead of taking the stress. So hire an expert or take an advice from an expert and get your purchase done through the experts.
I know we haven't discussed this, but I think it's a very important point, right? Which you just said now, hire an expert to help with the mortgage. And I remember my first property years ago when I was buying, I remember how nervous I was to engage with it. It was like, navigating a maze. I had no understanding. And even till today, they tell me EBOR and this and that. I have no clue. I'm just like, how much do I end up paying at the end of the month? So how do people find, what are the telltale signs we need to look for in an expert? How do you find the right person? How do you make sure that you're not dealing with someone who doesn't know what they're doing?
See, definitely when you want to hire an expert, basically talk to 2 or 3 people initially and then shortlist that. Talk to them, what are their experience, have they really worked for the banking industry, or even if you're into real estate, just check how much experience they have, what transactions they have done, and on a mortgage side, with which bank they have worked, with which bank are they working, do they have a real experience, what best value they can add. So talking to them, understanding their experience, understanding the type of clients they have dealt with, that can give you confidence. And once you feel that this is the right guy, then go for it.
Okay, fantastic. Now, you listen, buying a property, especially on huge debt, is a big thing. And there are, opportunities that mistakes can be made. What sort of mistakes should people kind of avoid or look out for, so it doesn't backfire on them? And which ones have you seen among first-time buyers and long-term investors?
So what happens when you're buying a property, sometimes they get very emotional. We are emotional, we are human beings. So we get very much attached to the property. And we just see the net value, the purchase value of the property. So you need to keep in mind when you're buying a property of 2 million, 3 million, 5 million or 10 million, that's not only the purchase thing. You need to keep the other cost associated with that. Lands department fees, real estate commission, if there is a real estate involved in it. Then you have got mortgage registration fees, bank fees. And then when you buy a property, if you're going to live in it, you're going to maybe renovate it, or you're going to buy furniture or some sort of addition to the property, that's going to cost money. So do the maths. It's more of a maths than of an emotional decision. Do the numbers. If it works for you, you can afford it, keeping all the cost in mind. And even after some time, you can still hold that assets. Then then you go for it. Otherwise, you might end up getting an over debt on yourself and then maybe eventually selling at loss. So do the maths calculation before you get into the property purchase.
Fantastic. And I'm assuming that you help them as well with this maths as well to make sure, because I remember doing my first property and I got it on a mortgage and I was trying, then they were like, hit me with this mortgage fees and this sort of fees. I'm like, I thought I was being scammed because it's kind of like, okay, nobody told me about this. And, you still have to fork out the money from your savings and stuff like that. So it definitely pays to have an expert that can kind of list out all the costs and, I think, like you said, taking debt is good, but taking good debt is better.
Correct.
Where it's like, can you really afford this on a monthly basis? And, you stick to where you can afford. So that's quite interesting. So let's go into another point, which is like an age-old question I've heard people say, which is better, to rent or versus buying? One of the biggest debates is that people should kind of buy a property and live in it. Other people say, no, buy your first property and rent it and, make money off of it. Which would you think, from your personal experience and opinion, should people rent or should people buy and rent it out or should people buy and live in it?
Yeah. See, this is again a good question. This is a very common question. Whoever arrives in UAE, they want to understand, or whoever has been living here in UAE, what should they do? I know a lot of clients, They have been here in the UAE. They could not buy the property. They're here for 5-10 years, or they have just moved in. They're asking, I mean, should we buy now, or what should we do? So my answer to them is simple. If your plan is for a shorter term, maybe you want to stay here for 1, 2, or 3 years and then leave, then rent will give you a flexibility, because when you acquire an asset, there are other fees, as I said, land department fees, real estate commission. So that adds up to the cost. So rent might be a better option for them. But now when it comes to buying, if your plan is longer, maybe 4 or 5 years or longer, and you want to stay here, if you want to live there in the property, then definitely buying in is an option, because if you don't buy, you pay on rent. That's what you're paying EMI of the landlord, not your EMI.
Yeah.
And by paying EMI, you can build that assets and you become the owner of that assets.
Yeah.
So long term is buying something which I suggest.
Okay, no, fantastic. Now I agree with you as well. I had this debate with one of my friends, and his case was, I want to rent because I want the flexibility to get up and move and leave. And I'm like, but if you're staying somewhere long term, you're staying in an apartment for 6 years or so, you're paying that person's mortgage off,
Correct.
and you
It's
have nothing to show for it at the end of the day. And sometimes paying a mortgage is cheaper than paying rent.
Correct, absolutely right. Yeah.
So it kind of makes sense sometimes to take it out. Like you can always decide to sell it if you're leaving. Yes, there's processes to go through, but I feel like definitely buying and owning trumps renting, because at the end of the day, if you stay somewhere 6-10 years and you have nothing to show for it, there's no asset, no capital appreciation, no potential for passive income. Okay, so let's talk a little bit more about building long-term wealth, right? If someone is looking to kind of become an investor, they're looking to kind of they've got their first property and they live in it, and they actually want to start investing, what should they be looking for? What should that look like for them?
See, my advice to someone who wants to invest in a property, the first most important thing is they should look for a few important things. One is the location of the property. Location is always a key. Good developer. You need to understand who is the main developer. Are they good, or are they reputable? What is their track record? Then you also need to see that what are the other facilities available in that area. Like, is there a good connectivity? Are there schools around if your kids are going to school? Or I mean, if there is going to be taken by a tenant, then you need to see, I mean, these are closer to school, malls. So all these amenities, facilities are around that. And so these are something which you need to look at it when you are looking to invest in a properties. Yeah, and especially the developer part is very important, because when the market is challenging, if you have a good developer, it's easy to rent, easy to sell, and those developer properties will take a less hit as compared to the general developers in the market.
Yeah. So I think what I'm hearing from you is developers are important, potentially because of the quality and reputation that they have. Secondly, location is important because of the footfall of traffic that you can get from there. So, I totally agree. So, for example, I'm always very interested in sort of tourist destinations, especially tourist destinations that are all year round, because you know that you're going to get a high occupancy, right? So, yes, locations, and then the developer, the quality, and especially when you're talking in an off-plan market, you want to know that they'll finish the product, right? And they don't just run away with the money halfway through. Yeah. So, okay, fantastic. So, again, I want to touch on sort of the kind of mortgage aspects for these, because it is, when you look at some of the terminology that you have, things like EBOR and, interest rates, and, how can you break that down and simplify it for people who are, considering taking that loan? What is an EBOR? How does it change? What's a fixed term rate and a flexible rate? Where is the advantage for the buyer?
Okay, great. Now, that's a very good question. I mean, for common people, they get confused. What is EBOR? How does the rate works and things like that, yeah? So in UAE, you have got two sets of mortgages. One is a fixed rate product and one is a variable rate product. So fixed rate product is like you get an introductory rates where your rate gets fixed for a certain period of time, maybe 1, 2, 3, 5 years, or in some cases 7 years. But 1 to 5 years is very common. So your mortgage rate is fixed for that period. whether the central bank, which is Emirates Interbank offer rate, the EBOR part, whether it goes up or down under the fixed rate, you know that this is the rate which you're going to pay for the next 4 years, 5 years, whatever the fixed period is. And then after the fixed period is over, you will be converted to a variable rate. So you have a bank margin plus the central bank rate, which is EBOR, which is similar, which is for every bank in the UAE, the EBOR. But the bank margin is something you need to look at. What is the margin they're giving? And margin plus EBOR, your rate gets repriced every quarter or every month based on the bank you choose. And based on that, your installment can go up or installment can go down. That's one product of mortgage. The second product of mortgage is a variable rate from day one. Variable rate is like you get a margin from a bank, typically a low margin plus the EBOR.
Yes.
That's basically changes every quarter or every month based on the setting you have with the bank. And every quarter, every month, your rate gets repriced. It can go up or it can go down. So if you ask me in today's market, I would suggest to go with a fixed rate option, maybe a fixed rate for 2 or 3 years.
Yes.
So you at least know that for the next 2-3 years, I have got this rate and this is the installment I'm going to pay. And then once the fixed period is over, you see what is your total rate, EBOR plus the bank margin. If it is competitive, you stay with the same bank. Otherwise, you can always switch your mortgage from that bank to any other bank.
Okay.
And refix the rate to a lower rate.
Okay, that's really interesting. So you would advise a fixed rate
At the moment,
yeah, because I think it makes sense if you get a fixed rate. I think it does, because if you have that fixed rate, you can plan accordingly for 3 years. You know, okay, this is what is set for 3 years, as opposed to variable, which it could go up or down depending on economic situations, on what the central bank sets the EBOR at.
Yeah.
Okay, fantastic. So let's listen. We're now in the age of AI. It's everywhere, it's every topic. So I wanted to take your view in your industry. Like, AI is transforming every industry that we know about now. But how do you see AI impacting your industry? How do you see it changing the way that people buy property or take loans out for property? What do you think is going to happen in the next 5 years in that industry?
That's a very good question. I mean, that's a hard question every industry is asking. So I believe this is going to revolutionize the entire industry. The way we process things, the way we document, the way we get the data, everything is going to transform. I see it is going to become, more easy for us in terms of process, in terms of documentation, in terms of getting quick decision from the banks. So that will basically help us. But on the other side, if you are just an average advisor or just an average person in that industry, whether it's be real estate or other way, financial industry, mortgage industry or any industry, AI will throw you out of the industry. You need to be really expert in that to use that data and make strategies and advice to the client. You're going to be in the market. In fact, you will be doing much more than what you are currently doing in terms of business. And other important thing is, no amount of AI can replace human interaction. At the end, we are all human and we need human touch. If you keep that part of the AI, definitely you're going to do well in the business.
Okay, fantastic. So helps us to process faster, which I think that's the strength of AI. Scalability and speed is great, but we still need human touch. We still need human beings to interact with human beings. Fantastic. Okay, so final question on mortgages and your expertise before we move on to the next segment is, if you were to sort of give one piece of advice to someone today who's looking to buy their first property, what would you tell them?
So my advice to anyone who wants to buy a property using a bank finance, before they go into the market, hunt for a property, talking to the brokers, talking to the sellers, looking at the property, before they do that, they should get a mortgage assessment done first. That will help them to understand what their borrowing capacity is. Instead of they just wasting the time going into the market and loving the property, getting emotionally attached to that property, and then later on comes back and says, oh, I can't get it because I can't afford it, or I have got these loans, I have got these issues, or I work for this company, or there are a lot of factors. So first, speak to a mortgage expert or your banker, understand what your borrowing capacity is, whether you can get that property or no, what type of property that bank can finance or no. So get a pre-approval. That will save your time, agent's time, seller's time, and then you can finalize.
Unless you know what you can afford.
Yeah, or you're a cash buyer,
Yeah.
then you don't need to worry about it. You go
Yeah.
there and you can just, you
And
can
you need
get
to-
into the market.
Yeah.
Again, the developer is the key, location is the key.
Yeah.
That's where you need to keep in mind. Yeah.
And negotiate hard.
And negotiate hard. Yeah. And again, this is the buyer's market,
Yeah.
and you can really negotiate the terms you want
Fantastic.
in 2026. Yeah.
Fantastic. Cool. Fahd, we're coming towards the end. And so our last segment here is the one we call Share Your Wisdom. And I have 3 questions for
Yeah,
you.
please.
So the first one is, what's the most surprising fact that you've learned about yourself in your professional journey or even your private life? And what do you consider to be success? And what
Yeah.
advice would you give to others who are starting out in your
Yeah.
field?
So these are very good questions. So I'll start with the first one. So what I have learned over a period of time, that we as human beings are much more capable than what we think. When I was in a corporate world working for one organization, I thought that this is my limit and this is what I can do and what I can achieve. But
Yeah.
honestly, when I came to my business and I realized that I'm much more capable on achieving things and getting great things done. And we are really doing great thanks to all our clients and all our stakeholders supporting us. But really, that's something we are much more capable than we think.
Fantastic.
And the second question was...
What do you consider to be success?
So, for me, success is freedom. When I left my corporate world, I came to my own business. Freedom of time, freedom of what set of people you want to work for, what strategy you want to make, as I said initially. Freedom of what you want to do. That's, that's what is important for me. That's success, I feel, freedom.
Okay. And the final one, what advice would you give to a young or new mortgage broker who's starting out?
See, what I have noticed in the market, the trust is a very rare commodity in the market,
Yes.
especially in the broker.
Yes.
So people don't trust mortgage brokers, or they try. They're very limited trust. It needs to be built. So this trust cannot be built without you giving honest advice, transparent advice, good service. Even if you're losing the deal, lose the deal. Don't run behind the money and commission or fear of, I will lose this deal, I will be out of my commission. Don't go for that. Honestly, during this conflict time, there were clients who were a bit in a situation or not sure. They got a pre-approval and they said, I want to buy. I said, if you're not comfortable, just wait for some time. And when you are comfortable, then go for it. Yes. You have a pre-approval, you have shortlisted a property. If you're not comfortable, you don't feel stable in your job, you're not confident, wait and then buy. So that same set of customer whom I gave them confidence, I didn't push them for the sale.
Yes.
Those are the set of customer. They are back again. Honestly, they have given me 10 more clients to help them to get a mortgage. Yeah. And this is something which I would say, be honest, be transparent. This will take you to places.
Yeah, no, absolutely, because we've said it was one of the biggest factors dealing with high net worth individuals or people who are putting their life savings into something is trust. Build that trust, build that transparency. And once they know that you have a great reputation with them, they can actually lead you to others because they know you're not going to destroy their reputation with their friends as well. So you're absolutely right. When it comes to dealing with big amounts of money, that trust and human capacity is more important. Fantastic. Fahd, thank you so much. I've learned a lot, about the mortgage industry, and I hope that our listeners and viewers would have taken a lot out of this too. Thank you so much.
Thank you, Isaac.